Good morning, everybody. It's Thursday, July 27th, 5:30 a.m. Central Time. December corn futures down 2.5 at 5:45 and 3/4. November soybeans up 3 1/4 at 14.23 and a quarter. December Chicago wheat up a half cent last trade at 7.43 now. December Kansas City wheat up 6 1/4 at 8.83 and a half. December spring wheat up 10 at 9.17 and a half. We had some fresh news out of the Black Sea again overnight.
So, ports in Ukraine's Odessa region were under missile attack again last night. Reuters reports that a security guard was killed and that a cargo terminal was damaged. Frequent attacks on Ukrainian grain infrastructure began 10 days ago. One Ukrainian official estimated that Russian airstrikes had damaged 26 port infrastructure facilities. This latest attack may be responsible for last night's strength in wheat futures.
Yes, we did have strength in wheat futures last night. There was a knee-jerk reaction where we rallied, and now SRW futures are lower as we record here. We've got kind of a mixed bag of a trade. So this is a very much muted reaction in wheat futures relative to what we'd seen over the last 10 days or so, whatever. So I don't know what it's going to take. I mean, U.S. wheat as it stands right now is, futures prices, cash prices we're probably overpriced based on global benchmarks, versus Russia. We're holding huge premiums, and Russia's the biggest exporter. There's still this geopolitical stuff is so difficult though, because anything could go wrong at any time. I mean, one missile hits the wrong ship in the Black Sea or whatever, and it's game on. Wheat rallies again. So these geopolitical events are very, very difficult to navigate in terms of the markets. But this morning, I think the wheat market, the corn market are exhausted. They're just not as interested in this headline as they were, 5 days ago, put it that way.
So, in response to Russia's aggression, NATO is boosting surveillance in the Black Sea region. NATO has condemned Russia's suspension of the Black Sea grain deal and is increasing surveillance and reconnaissance of the area. Maritime patrol aircraft and drones will be used to protect the region. Russia has continued to attack Ukrainian ports since the suspension of the deal back on July 17th. NATO stated that Russia's declaration that any ships traveling to Ukraine's Black Sea ports could be seen as carrying military cargo is impeding freedom of navigation.
I don't know if this is good or bad. So NATO is going to patrol the Black Sea. Is Russia going to see this as like a slap in the face, or is NATO patrolling the Black Sea? Does that mean that things go smoother in terms of shipments? I don't really know what to make of it. I feel like NATO involvement and U.S. involvement has kind of gone overboard here. Personally, the amount of money that the United States in particular has sent to Ukraine is just absolutely phenomenal. But that's the deal. I don't know how Russia's going to handle this. Russia still says that if their demands are met, and they're not going to be met, we're not going to let them back into SWIFT. But if they're met, they'll be back in the grain deal. I know that nobody's happy. The West is not happy about Russia's plan and actions regarding the grain deal. So still just a lot of back and forth here, I guess.
USDA reported 2 flash sales of U.S. soybeans to unknown destinations on Wednesday. U.S. exporters sold 229,000 metric tons and 272,000 metric tons of soybeans for a combined total of 501,000 metric tons of soybeans to unknown destinations for delivery during the next marketing year. Since the beginning of the year, the USDA has reported 15 flash sales of soybeans totaling 2.6 million metric tons.
Okay, so last week, I think after the export sales report, I said something on here that I need to clarify. I said something like, new crop demand for soybeans sucks, or something like that, because export sales are terrible. I mean, we're down. I mean, this is good. You sell 18 million bushels for new crop, great. But through last week's export sales report, and we've got another one this morning, we're running a 9.2 million metric ton deficit versus last year. We're down 65% in terms of new crop bean sales. The reason for this, let me explain this. The market needs to discourage new crop export sales in regard to soybeans because the balance sheet is so tight. That's the deal. I think the trade is taking a step or two forward. They're saying, you know what? The national yield in the United States is not 52. It's probably 50 or 50 and a half. And if it's that low, you've got to get to a point where you reduce demand via exports. It's not going to be reduced via crush. Crush margins are fantastic. We've got all sorts of policies in place and incentives for this crush expansion to be underway, for a lot of soybeans to be crushed. And, typically the last several years, it's been like 50-50 your demand base. It's crush is about half, exports are about half. The export half is where we need to trim demand and reduce demand so we don't run out of soybeans, essentially. That's how tight the balance sheets are. So me like saying that soybean demand sucks is not me like, I'm not bad mouthing the market. I'm just saying this is the market's job. This is what it has to do right now, and it's the soybean market's function in new crop futures to discourage export demand. Yeah, we saw some sales yesterday, but the overall book of sales is absolutely terrible.
So if you guys are not already subscribed to our premium content, you definitely need to check it out. You won't find content like this anywhere else. Joe, can you tell me about the video you put together yesterday?
Matt Bennett was on with me yesterday. U.S. farmers are undersold. What does it mean? We talked specifically about the 2023 corn and soybean crops, and the U.S. farmer being undersold is a problem as it relates to corn because corn prices have come back down with December futures below 550. You're probably below the cost of production or at the cost of production for a lot of farmers. In the case of soybeans, it's not so much a problem because you've got some black ink on the budgets. The market's very close to contract highs. But Matt has a lot of context in the commercial grain business. His feeling based on what he has discussed with those contacts is that farmers undersold as it relates to new crop corn. What does that mean? We discussed that in the video among a whole bunch of other things yesterday. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody tried to sell you anything else. Just a ton of info direct from us every single business day, guys. Check it out.
This morning's forecast looks slightly drier versus yesterday. The most recent 10-day Euro run leaves Illinois and Iowa mostly dry. Heat will be a factor again today. Parts of South Dakota, Nebraska, Kansas, Oklahoma, Missouri, and Texas could see temperatures in excess of 100 degrees. Minnesota, North Dakota, Illinois, and Iowa will see temperatures in the 90s. The models have shifted warmer for next week. Many areas could again see temperatures in the 90s and above 100 degrees.
Okay, so this GFS says it's going to be 112 degrees in southern Iowa next week. Maybe they're overdoing it just a little bit, but the idea here is that, yeah, it has shifted a little bit drier, and you're going to see this heat again next week. I think you're going to see like a short reprieve here for a couple days, maybe like Sunday, Monday, but another week of hot and dry. I think this week is detrimental to the crop. I think another week of hot and dry next week is detrimental to the crop. If you guys have thoughts on what these last couple of weeks mean in terms of corn production, soybean production, yield prospects, drop them in the YouTube comments. I will be curious to see what you guys think about all of that.
The North Dakota Wheat Tour is forecasting above average spring wheat yields. During the second day of the tour, which was yesterday, Crop Scouts projected the average hard red spring wheat yield in northwest and north central North Dakota at 45.7 bushels per acre, down from last year's day two average of 47.7 bushels. The estimate is, however, above the 5-year average of 38 bushels. USDA is forecasting North Dakota's spring wheat crop at 255.21 million bushels with an average yield of 47 bushels per acre. Last year, farmers harvested 263 million bushels and had an average yield of 50 bushels per acre.
North Dakota is not the only state that grows spring wheat, but they are the biggest spring wheat producer. USDA estimates that North Dakota will account for 53% of all U.S. spring wheat production this year. Montana is number 2, and they're only going to be like 18%. Crop ratings in North Dakota in a vacuum are actually below average. They're 54% good to excellent last week, which is 10% below the long-term average. They're going to get into, they've got one more area to survey today, Northeast North Dakota, and then I believe they're going to do like a final crop estimate. I think sometime later today is my thought there. So I guess this is maybe slightly better than expected. I don't know. If you guys are in spring wheat country and you have a thought on this, drop it in the YouTube comments here.
U.S. ethanol production increased week over week. Weekly output of 1.09 million barrels was up 2.2% compared to last week and up 5.8% versus the same week last year. Ethanol stocks were pegged at 23.2 million barrels. The print was up slightly on the week, but down 1.8% compared to the same week last year. Implied gasoline demand increased 1% compared to last week and was up 5% versus the same week last year. On average, over the last 4 weeks, implied U.S. gasoline demand is up 3.5% versus the same period last year.
All right, USDA may need to chop just a little bit off of their ethanol production number or corn demand via ethanol number, but this is good that we're seeing a recovery here. And generally speaking, you'll see some of your best ethanol production numbers like in that harvest time slot, post-harvest time slot. So this is good news for demand, and we can certainly use it because we don't have it in exports, or feed is maybe a little bit something you could argue about, but we definitely don't have it in exports.
Interest rates have reached their highest level in more than 22 years. On Wednesday, the Federal Reserve approved a quarter-point interest rate hike. The hike received unanimous approval from voting committee members. Fed Chair Jerome Powell stated that inflation has moderated, but hitting the Fed's 2% target has a long way to go. He did, however, signal that rates may hold steady at the Fed's next meeting in September. It all comes down to economic data between now and then. Markets were mixed after the announcement. The Dow continued its winning streak, gaining 82 points, but the S&P 500 and the NASDAQ were little changed. Keep in mind, yesterday was the Dow's 13th consecutive day of gains, its longest winning streak since 1987.
The stock market's one thing. The stock market likes this. The S&P is into fresh highs for the calendar year this morning. Really phenomenal move. So rates are at the highest level since 2001 now. You've got an effective Fed fund rate at 5.375%. Powell, who basically said, we may need to hike again. We're still worried about inflation. He does not want to make the mistake of cutting too early or taking his foot off the gas too early and seeing like a second spike in inflation. He doesn't want to make that mistake. He doesn't want to go down in history as being that guy who screwed up twice, because they most certainly screwed up the first time when they failed to raise rates for so long while inflation was like really a big deal, in 21 and into 22. So he doesn't want to mess up again. So I think higher for longer continues to be the trend in terms of interest rates. What did the cattle market do yesterday?
Cattle futures had a mostly positive day on Wednesday. Feeder cattle were up anywhere from 65 cents to $1.10. Live cattle futures were mixed, ranging from 25 cents lower to 37 cents higher. Cash cattle trade has yet to take off this week. Box beef values are bottoming this week. We usually see a seasonal rally in August, but haven't seen much movement to support that. However, there is talk of slaughter cuts the first 2 weeks of August, which would be supportive of a rally. On Wednesday, choice ended the day at 303.34. That was down 88 cents. Select ended the day at 279.81. That was up $2.26.
Outside markets this morning, guys. U.S. dollars off just a little bit. The S&P again into fresh highs for the calendar. You're up 27 points. Dow Jones is up 30 points. Bonds are off a little bit. Gold's up $6. Crude oil is up 66 cents at 79.44 in the September WTI. Have a great day, guys. We'll talk to you Friday morning.